Okay, students, today we will discuss about one-line consolidation. It can also be called as equity consolidation. The conditions in case of one-line consolidation: assets and liabilities and income and expenditure are not shown in consolidated financial statement of subsidiary company. Nothing but all the assets and liabilities and income and expenditure of the subsidiary company are not shown in the consolidated financial statement. First condition. And the second condition, we need to calculate the value of investment in subsidiary is taken at cost plus a proportionate share of retained earnings including profit from the date of acquisition. This is the second condition. Means first we need to calculate the retained earnings, value of investment, a proportionate profit of retained earnings. We need to calculate. There are two conditions. First thing, all the assets and liabilities and income expenditure of subsidiary company are not shown in the consolidated financial statement. Second condition, value of investment in subsidiary is taken at cost plus a proportionate share of retained earnings including profit from the date of acquisition. Okay. The problem. The following balance sheet of India Inc. and a French company subsidiary BH International as on 31st January 2011 were as follows. India Inc. Limited with equity shares 8 lakh, retained earnings 2 lakh, current liabilities 1 lakh, fixed assets 6 lakh, investment in BH International Limited 1 lakh 50,000, nothing but 12,000 shares, current assets 3 lakh 50,000, total 11 lakh. And next thing, BH International Limited balance sheet, liabilities, equity shares 2 lakh, reserves, there are two kinds of reserves. As on 1st April 2004, 50,000, and the total amount in the amount column 2 lakh 50,000, creditors 50,000, fixed assets 3 lakh 50,000, current assets 1 lakh 50,000, total in BH International Limited balance sheet in both sides 5 lakh. So before going to do the actual consolidated financial statement, we need to calculate some aspects. First thing, under working note, calculation of investment in BH International Limited. Cost of shares acquired by BH International Limited. Cost of shares acquired in BH International Limited. Actually 12,000 shares are there. 12,000 shares are there. Just you can observe the balance sheet in case of India Inc. Limited. See, the investment in BH India Limited 12,000 shares. So 12,000 shares amounting to 1 lakh 50,000 and add proportionate share of BH International's retained earnings and reserves. So 12,000 shares plus means 12,000 shares divided by 20,000 means 12,000 shares. Just you can observe in the balance sheet. In case of India Inc. Limited, 12,000 shares. 12,000 shares. And in case of BH International Limited, 2 lakh equity shares at 10 rupees. Nothing but 20,000 equity shares. So total 12,000 divided by 20,000 equity shares. Correct? Just you can see in the calculations. And 2 lakh 50,000 and 50,000. In case of BH International Limited, just you can observe this, right? The reserves 2 lakh 50,000 and the previous reserve as on 1st April 2004, 50,000. So 2 lakh 50,000 minus 50,000. 2 lakh 50,000 minus 50,000. So 12,000 divided by 20,000 multiplied by 2 lakh 50,000 minus 50,000. The amount is 1 lakh 20,000. So 1 lakh 50,000 plus 1 lakh 20,000, total amounting to 2 lakh 70,000. Next, calculation of reserves on consolidation. Calculation of reserves on consolidation. Actually, the existing amount of retained earnings in the India Inc. Limited is 2 lakh. 2 lakh. And proportionate share of reserves, as we calculated in the first calculation, proportionate share of reserves 1,20,000. Correct? So 2 lakh plus 1,20,000, total amounting to 3,20,000. And the third one is all the items of liabilities and assets of a parent company will be continued to be reflected in the consolidated statement. All items of assets and liabilities of the parent company will continue to be reflected in consolidated statement. Now come to the conclusion. Nothing but the preparation of consolidated balance sheet. In consolidated balance sheet, equity shares, in the balance sheet of India Inc. Limited with 8 lakh, reserves as we calculated in the working note 3,20,000, current liabilities balance sheet, the figure in the balance sheet in India Inc. Limited 1 lakh, fixed assets, in the India Inc. Limited balance sheet, fixed assets 6 lakh, investment in BHI, BH International Limited, calculated in the working note amounting to 2,70,000, and current assets same as it is in the parent company balance sheet 3,50,000. So total consolidated balance is 12,20,000.